We have a panel of experts from Kotak Mahindra Group, one of the India's leading financial services conglomerates, to discuss the budget and give us a perspective on the pros and cons. So, Mr. Nilesh Shah is the Chief Executive Officer and Managing Director at Kotak Mahindra Asset Management Company. Ms. Shanti Ekambaram serves as the President of Consumer Banking at Kotak Mahindra Bank Limited. Mr. Kamlesh Rao, Managing Director of Kotak Securities. What is your first reaction to the budget presented today? Is it a populist, progressive or pragmatic one?
I will call it a pragmatic budget. Within a lot of constraints, Finance Minister of India presents the budget. And like Harry Potter's magic wand, he has given money in the hands of consumers to spend by cutting taxation rates.
Yes.
Second, he has allocated more capital towards investments, especially in roads and railways. And third, and the most important, he has maintained the path of fiscal prudence.
How do you look at this, madam, this budget?
I'd say positive.
Okay.
Leading up to the budget, there was a lot of anticipation and there was a lot of apprehension. A lot of the anticipation was met. Maybe the corporate sector was a little unhappy because the tax rebate was only to the MSME, which is fine.
Yeah.
But a lot of the apprehensions regarding capital gains, long-term capital gains tax, estate duty, etc. did not come through.
How do you look at this, Sir Kamlesh, sir?
When you evaluate a financial budget, broadly two parameters: execution of the past and the intent of the future.
Okay.
I think execution of the past year, everything of fiscal prudence within norms is a great sign, and the intent to continue that going forward in the future, I think, is a great intent. For the capital markets, sometimes no bad news is good news, and therefore nothing touched on the capital gain side is a welcome step for the market.
What are the key takeaways you see in a broader sense?
If you heard the first 1 hour of the speech, it was all about expenditure. And then you saw some tax cuts, you saw some tax maintenance. So I presume the expectation is that the fiscal prudence will be maintained due to tax buoyancy on account of money that has come into because of demonetization, obviously, and more transparency and increase in tax to GDP ratio. And I would say that in the first 3 to 4 months, if a lot of the action on actual implementation of this allocation on expenditure happens, you will see the first signs of growth.
What will be the budget's net impact on the economy? No negatives like long-term capital gains tax means, can it be billed as a positive budget?
One, there was apprehension from FII about taxation. In this budget, that's been put to the rest. There was a withholding tax which was levied on ECBs and masala bonds at 5%. It was expiring on 30th June 2017. That's been extended to 3 years. So there's a proactive, reaction to FII's worries, and they are getting put to the rest.
Okay.
The second thing is the focus on productivity. We were having schemes like Manrega, which used to spend 35,000-40,000 crore a year, and that was used mainly for digging holes and filling it. It is going to benefit rural economy over a period of time by retaining water. And while we receive good monsoons, we are not good at retaining water. Water tables are going down in many parts of the country, adversely impacting farmer. So instead of giving loans to farmers or writing off their debt, it's far better that we actually ensure that the water level goes up. Pradhan Mantri Gram Sadak Yojana, as per the budget, the construction is almost double. It's just little under 100%. Now, when you provide connectivity to farmer, he will be able to move his goods from village to mandi and probably mandi to the city. We are a nation of dishonest taxpayers. He has put the mirror in front of us in impeccable numbers. No one can argue that we are an honest tax-paying nation.
After the budget, how do you think the bank lending rate scenario will pan out during the year ahead, considering the inflation is benign and banks are flush with liquidity after demo? Will that also force the banks to lower the rates and push credit?
So if you look at a home loan rate, exactly a year ago, it was maybe at about 9.5 or so. It is more than 100 basis points. Now it's almost at 840, 850 today.
Okay.
So I think the effect of demonetization, which has resulted into surplus in the banking system,
Yeah.
has already seen banks move the rates on incremental basis to their customers.
Kamlesh, actually, you can answer this. Actually, what will be its this rate coming down, the softness in the bank lending rates and all that, how it will impact the economy? And can you estimate on the exact growth impact of this?
We came through a very good year last year. We couldn't
Okay.
have had better rains. We couldn't have had been in the sweetest spot of inflation.
Okay.
I think what came in the middle was only the demonetization exercise. If you look at what has happened right now in
Yeah.
all segments, whether it is money being spent on infrastructure, rails or roads,
Yeah.
or something as important as affordable housing getting a kind of boost that it has got in the budget this year,
Yeah.
which would mean a lot for the housing segment. It could mean longer tenure loans for those companies. It could mean lower rates.
Yeah.
And finally, all of this is going to trickle down in terms of cost, whether it is interest cost, as Shanti mentioned, or it could be in terms of actual cost of what he is purchasing.
What is the impact of budget on the banking sector, particularly for NPS in general, and the new agri-loan targets, whether they are realistic?
So to address that, banks got a little bit of relief where the allowability for tax deduction on NPS went up from 7.5% to 8.5%. So it's positive for banks who have large NPS. I can't say Kotak Bank will benefit from it, but unfortunately not. But for the banking sector, it is good.
What are the stocks that could gain over the next few weeks or months?
Obviously, cyclicals are always something that market has been focusing on because interest rate is on its way downwards. If interest rates remain benign, then I am saying sectors that get impacted by and large would be auto ancillaries, by and large in that segment.
Okay.
Huge amount of investment in the area of infrastructure, so everything got to do with rails, roads, infrastructure companies that focus on rails, roads projects will have a significant amount of impact. If you've seen the NBFCs as of today, large amount of them were up prima facie because housing is a major boost at this point in time. The status of affordable housing makes a lot of difference on the financing for some of these companies because that status allows you to get money on long-term basis. The rates can be significantly lower. Bank lending sees differently to these companies. So I'm saying these are by and large broad sectors that I think will get impacted in the medium to long term. And companies, of course, which always have sound financial management, low levels of debt, are the ones that will get benefited.
Is it good to wait till the euphoria subsides before taking a plunge into the post-budget market, or whether actually it is you have to go by stock picks?
If you ask me this question in the month of September, October, we had projections of Nifty being at around 9,000, 9,100 levels.
Okay.
We saw a break in the middle. We've seen the budget go back, but like I said, market reacted today more to the fact that they were expecting bad news and that didn't happen and therefore it went up.
Yeah.
But like I said, fundamentals are in place.
Yeah.
There's no reason to believe that we have got a very artificial hike. We can argue whether the 500 points on the Sensex today was worth the rise or no. But I think the market is in a fair place.
Yeah.
Partial investment is always a great thing to do in the market at this point in time.
Okay.
Distribution across asset classes is a great thing to do in the market. So money distributed across financial savings in banks or in mutual funds and part of it in direct equity always is a favorable thing to do for customers.
Thank you very much, Ms. Shanti, Nilesh and Kamlesh.
Thank you.
Thank you very much.
Thank you.